The weekly recap, a tale of two markets. The first week of 2026 is officially over, and the market is sending mixed signals. The Dow snapped a four-day losing streak on Friday, climbing 319 points, but the S&P 500 and NASDAQ ended the week in the red. We are currently sitting at 6,858 on the S&P, struggling to maintain the momentum from 2025. Is the Santa Claus rally dead, or is this just a healthy reset? Today, we analyze the three biggest shocks of the week. The Tesla delivery shock, the reality check. Tesla, TSLA, was the biggest story of the week, and not in a good way. They reported 418,227 deliveries for Q4 2025, falling short of the 422,850 consensus. While production was solid at 434,000, the delivery miss sent the stock sliding. The silver lining. Tesla Energy is now a powerhouse. They deployed a record 14.2 gigawatt hours of storage this quarter. If you're a long-term bull, you aren't looking at the cars. You're looking at the grid. Wedbush's Dan Ives still sees a path to a $2 trillion valuation in 2026, but only if the robotaxi ramp-up hits its April milestones. The Palantir valuation reckoning, PLTR. If you thought Tesla was rough, look at Palantir, PLTR. The AI darling of 2025 just had a brutal week, plummeting 12.5% in 5 days to close near $167. Why the crash? It's a classic valuation reckoning. At 400 times trailing earnings, any sign of insider selling or caution triggers a dump. The stock failed to hold the $200 resistance. We are now watching the $165 support level. If that breaks, we could see a deeper correction before the February earnings report. CES 2026. The AI hardware war begins. Shift your focus to next week. CES 2026 in Las Vegas. This is the Super Bowl for tech stocks. What to watch? Intel is launching its Panther Lake chips, and Nvidia is rumored to reveal the RTX 50 series. But the real trend is physical AI. Look for humanoid robots and autonomous systems that move AI out of the screen and into the real world. Chip stocks like Nvidia and Intel were the only green spot on Friday. The market is front-running the CES hype. The macro road Fed and dividends. Finally, the macro view. The Fed has the interest rate at 3.5% to 3.75%, but they are pausing further cuts until they see next week's jobs data. The strategy, high-yield safety nets are back. Bank of America just named its top picks for Q1 2026, including Amazon, AMZN, for growth, and Dollar General, DG, for value. If you're looking for passive income, REITs like Equinix, EQIX, are showing strong relative strength. The closer. This week proved that 2026 won't be as easy as 2025. It's a stock picker's year. Comment data if you want my full spreadsheet of 2026 targets, and subscribe to 1Min Stocks for the daily updates you need to win.